Welcome back to Dukascopy TV. I'm Elaine Stenson. I'm joined in the studio now by Anton Khmelnitsky. He's the CIO and founder of Elbrus Capital. Anton, you are very welcome to the studio.
Hello, good morning.
Good morning. So I want to ask you about Russia. Why do you think it's being discounted as a market at the moment? And do you think the same thing is happening with Eastern European countries?
I mean, definitely the region is currently showing quite exceptionally low valuations compared to other markets globally, as you can see on the graphs, compared to its own history. I mean, there are really structural and cyclical issues here that explains the discount. On one side, of course, the European crisis of 2011 had a quite large impact on the slowdown of the region. Last year we had a quite strong shock with the crisis induced by Cyprus, which cut out a lot of flows of capital out of the region. And Russia, being a more specific country and in terms of its economic structure, also suffered from quite strong outflows of capital in the last few years. On the structural side, maybe of course the dependency on oil also explains the discounted assets in Russia, and the fact that the index in the end is heavily weighted with government stocks still today. But as you can see on the next slide, Russia is today nearly at a 10-12 years low in terms of valuations. If we look at standard price to earning ratio, which is at the moment between 5 and 6 times earnings. So it's back to the 2002, 2003 levels really for Russia. If you look at Russia against its own history of valuations, it's also heavily discounted in terms of dividend yields and bond yield ratio relationship, where today you're actually earning a higher yield by investing in Russian stocks, which today gives you something like 6 to 6.5%, whereas in the bond market you would basically get around 4% today. So there is a clearly a mispricing situation for Russia. It has also to do with the overall the sentiment regarding the region, but historically it has shown that this is always a good entry point for investors, which are willing to take a much more fundamental and medium-term view on investing in the region. At the end of the day, we are still looking at a very important markets globally, very sizable, with nearly 200 million people. So this I think of the next couple of years. We may see actually substantially higher valuation for the region than where they are today, really.
Okay, and can you tell me what are the main differences now between the old Russian economy and the new Russian economy?
Mm-hmm. Well, Russia today clearly has seen the emergence of a vast consumer market, and if you look today at just the headline growth of Russia, you may not necessarily see this trend appearing. In reality, of course, because of the very high weighting of old economy type of activities, or activities which are linked to the commodity sectors, clearly as this has slowed down globally, as you can see on the chart, this has been reflected in the current headline numbers and figures of GDP and industrial production. But in reality, if you look at the sub-segments of the economy today in Russia, they're growing very strongly. This graph highlight this trend, and today, yes, in housing, in really retail loan growth, in internet space, and consumers generally, we're seeing a very strong dynamic here. And Russia offers opportunities to invest in these segments today through many new companies which have appeared over the last 10 years, which have tended to benefit from the protective policies of Russia, and effectively that can be bought at a higher discount than other emerging markets. And we find that these are providing exciting opportunities for the next few years. This trend we think will continue.
Anton, thank you very much for joining me in the studio today.
Thank you.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.